Hello again, everyone. This is Joe Hentges with Beyond the Chart. You can do this. Become a better trader. Welcome back. We're going to take a look at a trade idea on Caterpillar, and this is from September 9th. What you're seeing is right off my trade ideas page on my website. This is only available to insider members, but I'm trying to put out some case studies here. And so this is one of where we went short on CAT. Let's take a look at what CAT's been doing real quick. And you can see it's been in a very solid downtrend since all the way back up here in July of 2014, pretty much peaking out when oil did. And CAT has kind of been in sync with the decline in oil prices, which may have had a short-term bottom. So CAT may have bottomed here, but let's talk about this trade idea, which was right here in the beginning of September. So right now, I issued this in the evening of September 9th, looking to sell. So I apologize for going in and out of that window. I just don't have a better way to do that. Let me zoom in here. So here's September 9th. And so the evening of September 9th, I said, if it breaks this low by 1 penny, I'm in. And so that's 72.77. That's what we're talking about here, 72.77. So buy the option, October 72.5 put. And so 72.5 is right here. So it's slightly out of the money right here. And so that next day at 8:37 a.m., bought to open 3 of those puts at 266 ask. And I'm always very conservative in here for the trade ideas, to show it only at the ask and selling at the bid. Now, that's a lot of slippage to have to cover, and I'm doing it just to have a conservative. So when you see the results of how profitable this trade was, I'm still, that is the profit covering all the slippage. Now, slippage far outweighs any cost of commissions, and we don't incur commissions in the trade ideas, and I don't think anybody on the internet shows commissions, just because everybody has different commission structures. So it's very hard to make any kind of comparison like that. So you got to try to get your commissions as low as you possibly can. But given that I'm showing at the ask and buying it back at the bid, that's covering that entire slippage or spread between the bid and the ask. So here we are getting it at 266. And so now we end up having a pullback, and it's pulling back against me. Now the stop I was using was 2 consecutive closes above the blue line, and then I usually put a little margin above that as my designated stop. And so they pulled back, but on this day, on the 17th, it didn't hit it, and it actually came down and closed below the blue line again. And this was actually what I call a re-entry setup. So this was a different setup than the one I was playing. So I decided, since I was getting this entry and this signal, I decided to enter again. So therefore on the 17th, right before the close, I bought to open the same exact thing, 3 of them, same quantity, at 154. So you notice how, because it pulled back and it was mostly time premium, it was all time premium, it had dropped in value, and I went back and got back in. Now, some people would say, well, look, you're just averaging down. Well, I am, but I'm only doing it because I got another signal to sell, okay? And so now I'm in with 6 for a total investment of $1,260. So now I've got my target set, okay? Here's target 1 and here's target 2. Well, guess what? Within 1, 2, 3 days, target 1 is hit. And so now, because I got 6, I'm selling 1/3. So I sell 2 at 276 bid. So now all of a sudden, my total investment was $1,260. Now all of a sudden, I'm pulling back $552 when target 1's hit. Now, literally the next day, 2 days later, you got the next day, and then this huge gap down happens right here. That's why I call this riding the wave, because explosive moves can happen at any time, but usually with the trend. At least that's my experience. Yeah, you're going to find the rare counter trend, explosive news event or kind of thing, but by and large, most of the big moves are going to be with the trend. And so look at this nice big gap. It gaps right through where my second target was. So what do? I wait until after it's been trading for 15 minutes and let it settle down a little bit and sell to close 2 more at 8:45 a.m. at $750 bid each. Now I'm booking another $1,500 in. So now I've brought in a total of $2,052. $1,260 invested, $2,052 returned so far. I've still got a third one. And now we're closing outside the Keltner channels. We're way down here outside the Keltner channels at extreme levels. And I've got a little guide, and Cat seems to follow this play because I've seen it before. I've seen this movie before. This is where you get 3 consecutive closes lower. One and another close lower, another close lower. Once I see 3, you put a stop right above the high of this third one here. And that's why I said stop. Now it's 64.35. The high, 64.32. So 3 cents above that high, I said, okay, I'm out. The very next day, that stop got hit. Sold 2 at $805 for a total of $1,610 on those 2, and brought in a total profit of $24.02. Because when you add 16, 15, and 552, you get something like 36 something versus 12, and the profit is $24.02, up 191% on the trade in 13 trading days. So this worked out very, very well. Ended up getting a really nice big move along with this. Of course, you never really expected and planned on that move, but I was trying to play with the trend, and this is what we got as a result of doing that. So hope you found it helpful. And hey, come on over and check out the website and look at what we've got as a part of the Insider members over there. You just click on the link on the video, and it'll take you over there. I hope you have a great Friday, and we'll talk to you again this weekend.